Hi, I'm Tony Filippone. I'm the Amazon best-selling author of Financial Planning for the Not Yet Wealthy, and I've also written this book, How to Have a Happy and Stress-Free Retirement. Both these books are available on Amazon.com. Hey, I wanted to talk to you about, is long-term care insurance really necessary for people who are getting ready to retire here in the Rockford area? It's a question I get a lot. A lot of people have questions about long-term care insurance. So I want to cover just the basics in this short video about what long-term care insurance really is, how much does it cost, and is it covered by Medicare or health insurance? Uh, who should buy it? Who shouldn't? And we're just going to cover a couple of quick topics right there. So let's get into it. First of all, what is long-term care insurance, or what is long-term care, period? So long-term care is a situation where your health changes and you're no longer able to take care of yourself and take care of your own basic human needs. Usually, a long-term care insurance policy will be triggered when somebody is unable to do two out of six, they call them activities of daily living. And these are basic things that we should all be able to do by ourselves, like eat, dress ourselves, bathe ourselves, transfer from a chair to a bed and a bed to a chair, go to the restroom on your own, be able to control that human urge, right? Continence. And then also cognitive impairment. If we lose our ability to think clearly, all of these are triggers for a long-term care benefit on a long-term care policy to kick in. But the point is, what is long-term care? Well, it's we get older. Usually it happens when we're older. It doesn't have to be age, but the big qualifier is, what is a long-term care event? It's when we are no longer able, our health changes to the point where we're no longer able to do these basic things that we normally would do for ourselves, and we're going to need assistance with those types of things. The problem with this is that it's very, very expensive type of care, because it's not that you need um, uh, what do they call it, skilled care necessarily, but it's just a lot of care. And it's, I mean, think of someone who had a stroke. They may need to be fed, they may need to be dressed, they may need to be changed. There's these difficult things that need to be done every day, ongoing, and they need a lot of help and a lot of care and a lot of assistance. And to get that kind of care does not come, to have someone else do that kind of care. Sometimes husband and wife will become a caretaker for each other, and sometimes it gets to a point where you just can't do it anymore. Maybe the spouse is getting old themselves and has troubles of their own. So anyway, it's a difficult circumstance, and nobody likes to think about themselves ever being in that circumstance. But if you were, it's not only emotionally devastating, it's financially devastating, because what's the cost of this kind of care? Well, um, it can be. I know I looked into a nursing home for my mom. She lives in New York, but when she first had dementia, we were thinking about, well, maybe she could come out here. Might be less expensive out here in Rockford area than maybe in metropolitan New York area, I thought. But for the type of care she needed, which was, she has cognitive issues like dementia, it was about $7,000 to $9,000 per month to get the kind of care she would really need. So again, very, very expensive, and that's not uncommon. I looked up. There's a good website. I reference it in my blog post on this same topic, and it's from a insurance company, Genworth, and you can put in your zip code, and it'll tell you about what long-term care would be in your neck of the woods. And for a private bed, in other words, you're not sharing a room with anyone in our area, the typical stay would be about $83,000 a year. It would cost just for that type of care in our area. So you think about your retirement portfolio, and where would that $83,000 come from? And then what would that leave your spouse with if you had to spend just 1 year in a facility? what could that do to your financial plan, right? So there's a good colleague of mine, Tom Hegna, he's an economist, and he says there's no retirement plan that is done or complete without at least addressing this long-term care risk, because it's a very real risk. About like basically 1 out of 2, about almost 50%. I've seen numbers as high as 70% of all people will face, or all couples will face at least one long-term care incident. There's lots of stats on that. And in fact, I have some of them in the blog post that this video can be found in. So it's very costly, and it's not covered. It's not covered by anything else. So yeah, a lot of people mistakenly think, oh, Medicare will cover that. Medicare does not cover long-term care. It's not does not cover any custodial, ongoing type of care. It covers short-term care if you're in the hospital first for 3 days, and then it covers it on a limited basis for up to 100 days, and there's a copay that goes along with it. So, and then after 100 days, you've got nothing. There's no coverage from Medicare. So the average stay in a facility is like 2.5 years. Medicare can cover part of that for 100 days and only under certain circumstances. So I wouldn't be relying on Medicare for this kind of help. Your health insurance doesn't cover it because that's not what health insurance is designed for. Health insurance is not designed for custodial, ongoing type of care. It's designed for treatment, tests, surgeries, medicines. It's not designed for ongoing type of care, feeding, dressing, bathing. It was never meant to cover that, and it doesn't cover that. So your health insurance is not going to cover it. Medicare is not going to cover it. What about Medicaid? Yes, Medicaid will cover it, but guess what? You have to be pretty much financially destitute to qualify for Medicaid. So why don't people buy long-term care then? Why isn't everybody running out and getting a long-term care policy, right? With all this risk and potential expense. The reason is it's costly. The long-term care insurance itself costs a lot of money. It tends to be an expensive type of policy, and it's because this care can be the insurance can be expensive. The problem that goes along with that is there's a chance you might pay for it, and then pay for it and pay for it, and you might, a lot of times you don't have a claim like this until you're 80. You're buying this maybe in your young 60s or late 50s. You're going to pay for all these years, 20 years of premiums, and then you could pass away in your sleep and never need it. We call that the use it or lose it problem with long-term care. Here's this expensive insurance that you may never need. So a lot of people, because it's expensive, because they may never need it, and because the costs can go up, usually costs on long-term care are not locked in. It's a cost that can increase. So, for these reasons, a lot of people just don't buy long-term care insurance. Now, who really needs it? Does everybody even need long-term care insurance? No, no, not everybody needs it. If you don't have a lot of savings, and I have clients all over the board. So, I've got clients who, just have a little bit of saved and they want to make sure they use it right. And then I've got clients who've got, a million plus. So it really just depends on your situation in life, right? If you are, kind of, let's say less, middle income or less, let's say less than middle income, and you've only got maybe $100,000 or $150,000 saved, it may not make sense for you to buy long-term care because it's probably going to be expensive. And there's a good chance that you're going to qualify for Medicaid if you ever had that kind of an issue, because one long-term care issue is likely to spend through those assets, and you're not, you're going to qualify pretty quickly for Medicaid. And if that's the case, do you really need to spend money on long-term care insurance? You don't have assets to protect, and once the assets get spent, the government's going to take care of you. So there's an argument that says, hey, if you're on the low side, why buy the insurance? You probably don't have a lot of income to support the insurance anyway. So that's something to think about. And then if you're, on the wealthy side, some wealthy clients say, well, Tony, I have enough that I should be able to survive that, and I could pay for that kind of care, and I'd still have money left over to take care of my spouse. And that's true. And so for those people, they don't necessarily need long-term care. So who needs it the most? Well, middle income people, right? If you've got 200,000, 300, 400, 500,000, even 700,000 saved, what would a $200,000 long-term care claim, or, if you lost $250,000 to a health issue, would that leave your spouse as secure? No, right? I mean, that's going to take a big bite out of the lifestyle they could have had. So the long-term care can be make or break what type of retirement your remaining spouse is going to have, and also what kind of care you're going to be able to get. So these are things to think about. So the middle income people are the ones who are probably going to get hit the hardest and probably need long-term care the most. Wealthy clients, I know I said you don't need it, but it doesn't mean you shouldn't have it. Again, is it smarter to use your own money or to use discounted dollars that you buy from an insurance company? I mean, if you could pay, I've got a client now that's paying about $200 a month, and we've got them over $150,000 of potential care for that $200 a month. Well, that's not bad. I mean, it's going to take them 35 years to save that money. If they did the math, they'll never save it in time. So you're basically buying leveraged dollars. You're buying dollars with pennies to pay for your care. It's like getting an extreme discount on the type of care, on paying for your care. Why wouldn't you use the insurance company's pooled risk versus taking on the risk all by yourself? Just like you do with your homeowner's insurance. You don't say, well, I could afford to build a new house, so I don't buy homeowner's insurance. No, you buy homeowner's insurance because if that ever happens, you don't want to use your money. You want to use the insurance company's money, right? You want to insure that risk. Long-term care is similar, and it does make sense to insure that risk for people. So anyway, I can get into a little bit more what types of plans and stuff like that, but I'll do that in another video. I wanted to keep this short. So the answer to that question is yeah, for a lot of people, you do need it. Not everyone needs it, but hopefully you have a better idea of what it is and who might need it. Now, if you're watching this video, please, if you haven't yet, watch my free retirement video, how to avoid going broke in retirement while securing your nest egg. It's on this page somewhere. Go ahead and look at that. It's like 10 minutes long, and it's great. It tells you about a risk that a lot of people miss heading into retirement, a big risk. And we don't want you to fall into that trap. So go ahead and watch that free retirement video, how to avoid going broke in retirement. Go ahead and click that now. Thanks for watching. Have a great day.